This past week in the Indian markets was really something else. It was a bit of a masterclass in, well, deception. On the surface, if you just glanced at the headlines, everything looked pretty calm. But underneath, a huge contradiction was brewing, and the main numbers were telling a completely different story from what was actually going on. See, this wasn't just one market. It felt like a tale of two completely different markets. While India's biggest, most famous companies were just kind of floating along, treading water, hundreds, and I mean hundreds of smaller companies were sinking. And they were sinking fast. So let's dive right into this because it's the core mystery of the week, right? How in the world can the main stock market indices be totally flat, basically unchanged, while all these smaller companies are in a nosedive? What is really going on here? And this chart just lays it all out perfectly. You've got the Nifty 50, which tracks India's largest companies. Totally flat, zero change. But then look at the Nifty Midcap 100, down almost a full percent. And the Smallcap 100, oof, down nearly 2%. I mean, that's not a minor difference. That is a huge divergence in what the market was feeling. So what on earth could cause such a split personality in the market? Well, it all comes down to one single major event, a huge decision by the Reserve Bank of India that pretty much sent shockwaves through the entire economy. And that big decision was all about something called the repo rate. The easiest way to think about it is like this. It's the wholesale interest rate. It's the rate the central bank, the RBI, charges all the other commercial banks. So when the RBI cuts this rate, it's kind of like they're putting money on sale for the entire financial system. It just makes it cheaper for everyone to borrow. And that is exactly what they did. The RBI cut the repo rate by 25 basis points. Now, a basis point is just 1/100th of a percent, so this is a 1/4% cut. And yeah, that might not sound like a lot, but this one move brought the total rate cuts for the year to a really significant 125 basis points. That's a huge signal that the RBI is trying to jumpstart the economy. This slide really shows you the pressure the RBI was under. On one hand, you've got inflation at a record low, just 0.25%, way below their target. But on the other hand, industrial growth has slowed to an absolute crawl at just 0.4%. So the economy was screaming for a boost. And with inflation so low, the RBI had the perfect window to act. Now, a major policy decision like this never happens in a vacuum, right? It creates this powerful ripple effect. And in this case, it created a really clear set of winners and losers all across the market. So who were the big winners? Well, mostly it was the sectors that are most sensitive to interest rates. Banks rallied because cheaper borrowing can help their profit margins. The auto sector got a nice little lift, hoping that cheaper car loans would bring people back into the showrooms. And the IT sector had an absolutely fantastic week, up 3.5%. Why? Because a weaker rupee means their earnings from overseas are worth more when they bring them back home. But as with everything in the economy, every action has a reaction. And this rate cut, it wasn't good news for everyone. And here's the first big consequence. Just look at this table. It shows the Indian rupee weakened against the US dollar by almost 0.7%. So why did that happen? It's pretty simple. Lower interest rates make holding on to a currency less attractive for global investors, so its value tends to drop. And this creates a classic economic trade-off. It's a double-edged sword. A weaker rupee is fantastic news for India's IT sector because all their dollar revenues are suddenly worth more in rupees. But for the average person, it means that imported goods, everything from your smartphone to the oil in your car, suddenly get more expensive. This slide just perfectly illustrates the tug-of-war that was happening right under the surface. You had foreign institutional investors, these are the big international funds, and they were selling, pulling over 8,300 crore rupees out of Indian stocks. But at the same time, domestic institutional investors, think local mutual funds, they were buying, stepping in and providing the crucial support that kept those main indices from crashing. Of course, India's market doesn't exist in a bubble. To really get the full picture, we've got to look at the powerful global forces that were at play, especially when it comes to things like commodities. And this chart shows a really clear trend. Commodity prices are on the rise. Gold, which is a classic safe haven, was up 1.4%. Crude oil was up around 1%. And even copper, which is a key indicator of industrial health, saw a pretty big jump. For a major importer like India, rising oil prices just add another layer of economic pressure. So what's behind all this? Well, it's a mix of factors. The biggest one is probably the expectation that the U.S. Federal Reserve is going to cut its own interest rates. When the world's biggest economy makes borrowing cheaper, it tends to lift asset prices pretty much everywhere. But at the same time, you've got geopolitical risks, like tensions in the Middle East, that are pushing oil prices higher because of supply concerns.
Okay, so that's the week in a nutshell. But in the markets, it's always about what's next. So let's take a look at the key events that are going to shape the next couple of weeks.
You might want to mark your calendars for these 3 dates. On December 12th, we get India's inflation data for November. That'll tell us if that record low was just a one-time thing. Then in mid-December, all eyes are going to be on the US Fed's policy meeting. And later in the month, we'll see if India's industrial production managed to bounce back. Each of these is going to be a major market-moving event. So this leaves us with the final big question that really sums up the entire week. With foreign money flowing out and all these global pressures building, can domestic investors continue to hold up the Indian market? That right there is the multi-trillion rupee question on everyone's mind. Thanks for joining us.